Mark Skousen claims a revolt against EVs is underway, and as a result, certain stocks are set to explode. However, he won't reveal the names of these stocks unless you purchase his newsletters. The good news is that he left enough clues to figure them out, and I reveal them here for free. Drop a like and subscribe if you appreciate the effort. There are multiple stocks to uncover, so we're going to jump right into it. The gist of this teaser is that certain markets won't be affected by electric vehicles and are poised to gain big because of this. The first stock is a big rig company, and here's what Mark says about it. It's a company headquartered in the Midwestern US that specializes in largely invisible powertrain components for commercial highway vehicles, including Class 8 big rigs. Each year, these heavyweight trucks travel an astonishing 248 billion miles on North American roads, give or take, and approximately 74% of them couldn't move an inch without this company's products. Mark also makes the following claims about the company. This firm has a lot more going for it than just truck parts. They also make propulsion components for buses, fire and emergency vehicles, RVs and motorhomes, giant dump trucks, and many other kinds of heavy-duty equipment. Their products are currently spec'd by over 250 vehicle manufacturers worldwide, and counting. That's why Forbes calls them essential. They're insulated from regional risks because they've got manufacturing facilities in the US, Europe, and Asia, and a strong business presence in over 150 countries. Approximately 6% of their revenue comes from defense contracts, including for wheeled and tracked armored military vehicles. The wildcard kicker is that this firm is also a pioneer in extreme-duty hybrid and electric propulsion systems. The company being pitched here is Allison Transmission Holdings, and the ticker is ALSN. Allison Transmission is an American manufacturer specializing in automatic transmissions and hybrid propulsion systems for commercial and military vehicles. Founded in 1915 and headquartered in Indianapolis, Indiana, the company is known for producing durable and efficient transmissions used in buses, trucks, construction vehicles, and defense applications. Allison's products are recognized for their reliability, fuel efficiency, and ability to perform in demanding conditions, making them a leading choice in both domestic and international markets. I personally think this stock is a buy, and here's why. First is dominant market position with 60% global share. Allison Transmission holds approximately 60% of the global market for fully automatic transmissions in medium and heavy-duty commercial vehicles, underscoring its industry leadership and competitive advantage. Second is robust financial performance and shareholder returns. The company has demonstrated strong financial health, with a trailing 12-month revenue of $3.2 billion and a profit margin of 22.7%. Notably, a $1,000 investment in Allison Transmission a decade ago would be worth approximately $3,320 today, reflecting its consistent value appreciation. Third is strategic positioning in electrification. Allison is proactively investing in electric hybrid and fully electric propulsion systems, positioning itself to capitalize on the industry's shift towards electrification and sustainable technologies. Fourth is attractive valuation metrics. With a price-to-earnings ratio of 13.4, Allison Transmission is trading at a valuation that may appeal to value investors, especially considering its strong earnings and growth prospects. Fifth is strong ties with defense sector. A significant portion of Allison's revenue comes from military contracts. With ongoing global military spending, Allison benefits from long-term, high-value contracts that provide both stability and predictable cash flow. I'm going to reveal the rest of the stocks in about 20 seconds, but before I do that, I want to remind you to click the link in the description to check out Alpha Picks. I reviewed over 100 stock picking services, and Alpha Picks performs the best and actually beats the market easily. If you click the link in the description, you get $50 off Alpha Picks. So go ahead and click that link and take advantage of this amazing deal. Here's what Mark has to say about the second stock. It's a major player in multiple industries and sectors, including engines for large agricultural tractors and harvesters, plus other heavy off-road equipment like rock crushers, trenchers, wood chippers, industrial pumps, and more. Natural gas engines, gas turbines, peak load power plants, and large-scale emergency generators. Locomotive and ship propulsion systems too. Machinery for the mining and construction industries, along with specialized electronics for controlling the heavy equipment used in those businesses. Defense products including power plants and control systems for U.S. submarines, plus heavy vehicles for foreign militaries like the UK, Israel, Sweden, and more. Equipment, services, and technologies for other industries like infrastructure, waste management, oil and gas drilling, and forestry. Mark also says, this stock's had one of the steadiest upward trajectories of any company I've ever seen. Their stock has seen 2,073% max gains over the last 15 years. That's a raw return of 138% per year on average, without compounding. It happened through all kinds of market mayhem and turmoil too. Crashes, wars, elections, pandemics, tech bubbles, real estate busts, and more. The stock being pitched here is Caterpillar, and the ticker symbol is CAT. Caterpillar Inc. is a global leader in manufacturing, construction, and mining equipment, diesel and natural gas engines, industrial gas turbines, and diesel-electric locomotives. The company also provides financial services through its subsidiary, Caterpillar Financial Services. Known for its iconic yellow machinery, Caterpillar supports industries such as construction, mining, energy, and transportation worldwide. The valuation of Caterpillar should give investors pause, but I still think this stock is a buy as long as you hold for the long term. Here's why I think this. First is dominance in global infrastructure development. Caterpillar stands to benefit from global infrastructure building and restoring trends, making it a top pick for investors looking to capitalize on worldwide development projects. Second is robust shareholder returns through buybacks and dividends. The company has expanded its stock buyback program by $20 billion and increased its quarterly dividend, demonstrating a strong commitment to returning value to shareholders. Third is resilience amidst inflationary pressures. Caterpillar has shown the ability to increase prices without significantly affecting demand, maintaining earnings growth even during periods of high inflation. Fourth is strategic positioning in the energy transition. The company's machinery is integral to building renewable energy infrastructure and electricity networks, positioning it favorably in the shift towards clean energy. Fifth is strong financial performance and growth prospects. With a solid backlog and ongoing investments in expanding its offerings and services, Caterpillar is well positioned for improved results and sustained growth. These factors make Caterpillar a compelling consideration for investors seeking a stable and growth-oriented addition to their portfolios. After the two main stocks, Mark pitches another report with three more stocks, but only leaves clues for one of the companies. Mark claims this is his only pure vehicle play on the EV Revolt, and claimed the company he's pitching could soon overtake Tesla as the most valuable car company in the world. He leaves the following hints about the company. Why are we calling for this company's swift rise to the top of the passenger vehicle food chain, you're wondering? The biggest reason is because this particular car maker is the global pioneer in an ingenious, efficient propulsion technology known as HSD. Some analysts believe HSD drivetrains, like the one pictured in this schematic, will prove superior to both internal combustion and all-electric vehicles in the minds of car buyers. And the company I'm talking about holds over 20,000 key patents for the breakthrough technology. Now, I'll bet you're wondering, does the H in HSD stand for hydrogen? You'll get the answer to that question in three urgent EV Revolt stocks to buy now. The company being pitched here is Toyota, and the ticker is TM. HSD stands for Hybrid Synergy Drive, and is the drivetrain technology used in vehicles with the Toyota and Lexus. I personally like Toyota cars, but I think this stock is a hold at the moment. Here's why. First is recent profit decline signals caution. Toyota reported its first quarterly profit drop in 2 years, with a 20% decrease in operating profit for the July-September period, indicating potential challenges ahead. Second is production woes impacting performance. The automaker has faced production issues in key markets like Japan and the US, affecting sales momentum and raising concerns about its operational efficiency. Third is competitive pressures from Chinese brands. Increased competition from Chinese automakers, especially in the electric vehicle segment, poses a threat to Toyota's market share and profitability. Fourth is unchanged profit forecast amid market expectations. Despite recent challenges, Toyota maintained its profit forecast for the current year at 4.3 trillion yen, which may not meet analysts' expectations for growth. Fifth is reputational risks from certification scandals. Recent vehicle testing violations have led to production suspensions and could harm Toyota's brand reputation, potentially affecting future sales. Given these factors, it's prudent for investors to hold their positions and monitor Toyota's performance closely before making further investment decisions. And if you really want to make money with the stock market, make sure to click the link in the description to check out Alpha Picks from Seeking Alpha. I've reviewed hundreds of stock picking services, and this one performs the best. Since its inception 2 years ago, it's absolutely been crushing the market and has tripled the returns of the market in that time period. And if you click the link in the description, you get $50 off this service. So make sure to click that link now and start investing the smart way.